What's up, guys? What's happening? Eric here, Mr. Fired Up Wealth. I'm going to bring you a quick video today on an ETF that I just started buying. Now, this is for my retirement account. Most of what I share on the channel is for my taxable brokerage, but this is actually going to be a retirement ETF. It deals with clean energy. It's something that nobody talks about. The holdings on this thing, in my opinion, this is the best, most balanced ETF for clean energy. Now, if you're not in the US or if you're in a place that you can't buy this ETF, you're still going to want to see what's under the hood of this thing. Stay tuned. Okay, so there's no denying that this is a hot topic, right? This is a secular growth trend. We're talking about clean energy, but clean energy can mean a lot of different things, from electric vehicles to hydrogen to everything in between. There's tons of things out there with solar. So how do I, as an investor, capitalize on this secular growth trend with maybe not so much risk, with trying to hedge a little bit of the risk? Now, there's a couple ETFs that you probably have heard of. The one I'm going to show you today is one that I've never seen anybody else talk about. I just did some research and happened to stumble across it. I just started buying it in my retirement account. I'm hoping that it pulls back a little bit so I can add more. You know, obviously, without getting political, depending on the presidential election coming up, this thing could rally really hard with a Biden win. Even without it, I do see it as a secular growth trend in a long-term portfolio. Not something I would put my entire portfolio on, or a huge percentage, but it's kind of a speculative play to play into the secular growth trend. Some of you guys out there that are younger than me might love this ETF, you know, even a larger position in your portfolio. You're younger, you obviously are, taking more risks, trying to grow. I've already grown a lot of my wealth, and of course, at this point, part of my job is capital preservation. So I'm at a different point, ready to retire young. So let's just jump right into this, guys. So what ETF am I talking about? So the ETF is by Invesco. So that's good news for perhaps some of the international investors, because Invesco is probably a more common one. This thing is, the ticker is PBW. It's the Invesco WILDERHILL Clean Energy ETF. And it's described as the Invesco WILDERHILL Clean Energy ETF is based on the WILDERHILL Clean Energy Index. Well, thanks. That's real obvious. Thanks, Captain. The fund will normally invest at least 90% of its total assets in common stocks that comprise the index. The index is composed of stocks of companies that are publicly traded in the United States and engage in the business of advancement of cleaner energy and conservation. The fund and the index are rebalanced every quarter. Now, the key thing to pay attention on here is it says publicly traded in the United States. So this is actually a very global ETF. It's going to give you exposure into several different countries. And what I'm going to do is I'm actually going to show you the performance. This thing hasn't been around. In terms of this, it was basically rebuilt. The index was rebuilt. So it's going to show you all this past history, but it's completely different in this stage than its inception. So if you look at the distributions and things like that, I'm going to actually jump right over to Fidelity. So Fidelity, expense ratio is kind of high. It's 0.7%. Now, it is rebalanced every quarter. It does, according to Fidelity, pay a distribution yield of 0.58%, which would basically cover almost all the expense ratio. There'd be a difference of 0.112. In terms of the performance year to date, this thing has crushed it. It's up 78%. It's up 7% in the last 4 weeks. It's up 110% in the last 52 weeks. So I'm not suggesting that you just go out and buy this, hand over fist and go all in. You're going to want a dollar cost average into this. It is a little bit late to the party, but there are a lot of people that are just starting to look to invest into this space. The ones that already have done really well. If you look at this now, so the first holding at 3.5% weight is called Lithium Americas Corp. Second is NIO. So all my NIO lovers out there, let's get in Patreon. We've got, Gustavo. We've got Will. We've got Hode. There's probably more. I'm sorry if I missed you. Those are the three biggest cheerleaders. So they're happy to see now that I actually own a very small percentage of NIO. Another one they talk about quite often in this disruptive technology in our Patreon group on Discord is Sunrun Inc. There's another one called Livent Corp. Maxion Solar Technologies is about 2.5%. Blink, you've probably heard of. You've got Solar Edge Technologies. You got Workhorse. So this is a really nice blend of lithium, of EV cars, you know, of different technologies and solar and things like that. Bloom Energy is in here. Sun Power is in here. Let's just take a quick look at the entire holdings. Before I do that, so exposure, you can see on the right-hand side, and let me scroll down just so in case my camera's in the way. So down over here, you see the country exposure. So this is saying United States, 72.3%. China is about 10%. Canada's in there, Singapore, Chile, United Kingdom, and India. I actually want to take a look at, if I go into this portfolio compensation, this is on Fidelity. So Fidelity is a really good broker. Been with them for years. This gives you a nice breakdown of the holdings. There's a total of 48 holdings. It shows you the regional exposure, you know, by North America, Asia, et cetera. So it's 80% North America, 15% Asia. It's got a little bit of Latin America, a little bit of Europe. Country exposure breaks it down nice on a pie chart. 72% is the US, 10% China. You got 8.5% Canada, 2.5% Singapore, 2.4% Chile, United Kingdom, a little over 2%, India over a little over 2%. In the sector exposure, this is where it's nice because it's really balanced. And, you know, a lot of you guys that are investing in those high risk, high reward growth type portfolios, especially if you're doing ETFs, a lot of you guys have the ARK ETFs, you've got WCLD, you got CLOU, you know, those kind of plays, SOX or SMH, QQQ. This is going to give you a little bit more balance when you look at different sector exposures. It's got 30% industrials. It's got about 30% IT for information technology. It's got consumer discretionary, a little over 15%, 12.7% materials. It's got a little bit utilities in there and even energy. So for me, this is awesome because if you've been following me for very long, you know that I don't invest a lot in utilities or energy. So this gives me some exposure and in areas where I think that it will actually be potential growth as well. So going back, you can see the chart here. You know, obviously this thing has made this huge run, you know, from the 50s up into $69, $70. I did buy a little bit of this, not very much. You'll notice the analyst ratings that Morningstar has it rated really low. You'll notice that Fact Sheet has it as a B. You know, it definitely is not a well-known in terms of volume. This is another thing to pay attention to. The volume, it shows 106,862. It shows the 90-day average volume of 205,000. And it only has, well, the net assets isn't terrible. It's actually $742 million of net assets. And that was of September 30th of 2020. You remember some other videos I've done like WCLD though, where the volume and net assets were low, but people caught on. I do see this one growing a lot because if you might have an ETF already, like this is another thing that's cool. If you go on Fidelity, it'll show you similar ETFs. So what a lot of you guys probably know about is ICLN, and that's the iShares Global Clean Energy ETF. And that one's done really well too. But if you look at this, right, they're both passively managed, but the ICLN, the one that you hear about all the time, that's up 92.83% over the past 52 weeks, where the one we're talking about today, PBW, is actually up 141%. It's outperformed significantly. The net assets on ICLN is about 1.54 billion. So it is twice the size in terms of people investing in it. Again, it's more well known. The expense ratio is actually a little bit less at 0.46. And the tracking error is a little bit less as well. If you're not familiar with tracking error, that deals with these scores like this FactSet score. It's basically, you can Google it and look into it more, but basically with an ETF, the institution that's managing it has to buy and sell and basically try to match it, the index as well, as good as they possibly can. And there's always going to be a little bit of tracking error when it comes to that. And that's kind of what that is. So you want those tracking error numbers, obviously lower. Both of these are pretty high. If you look at like the Invesco Global Water ETF, which some of you might be interested in, it's PIO, you know, that one has a higher expense ratio, but then the tracking error is actually 6.8%, or 6.8, which is quite a bit lower. So 6.8 versus 28.3 on this PBW. Let's look at the holdings. So there's 48 holdings. Go through these. We went through a few earlier, but I'm going to show you all the holdings here. So make this nice and big on your screen for you. So you have the Lithium Americas Corp is 3.5%, NIO 2.6%, Sunrun, Livent Corp. You can see Blink Charging is about 2.5%. Solar Edge is about 2.5%. Workhorse in that same 2.5% range. You know, you can see most of these are going to stay in that 2.5% range. So it doesn't say anywhere when I'm reading it that it's considered an equal weight, but it sure seems like it is behaving that way. And I think that's because it's balanced every quarter. So I probably just missed it somewhere, but it certainly looks like it's behaving like a equal weight. There's only a few in here that aren't in that 2% range. So it gives you a nice exposure and hedges your risk on a lot of these really popular, you know, kind of trendy names. And a lot of these are kind of the Robinhood type names that you hear, like, you know, Blink and Workhorse and NIO, Plug Power's on here, M-Phase Energy. Then you got, you know, companies like Canadian Solar. You got ALB, which is, you know, back to mining for lithium. You know, so it's a really good blend of different types of companies within the clean energy sector, from, you know, mining the lithium for, you know, batteries like with Tesla, to the actual, you know, Tesla's in here as well. You can see Tesla Inc. 2.46% weight. So you've got Tesla in here, you've got, you know, Workhorse, you've got NIO. So you got the, you know, electric vehicle market. You've got, you know, different power and utility type companies, solar companies, you know, hydrogen related companies. So there's just a great mix in here. Azure Power's in here. Renewable Energy Group you might have heard of, Universal Display Corp. Ballard Power is another one that you see a lot. You've probably seen that one a lot. A lot of Robinhood traders like that one. So, but I just wanted to bring you this quick video today. Again, the ticker is PBW. It's the Invesco WilderHill Clean Energy ETF. It's considered a small growth equity ETF. I think it's very interesting. It gives you a lot of diversity and exposure to this clean energy sector. And it's one that I'm actually adding in my portfolio. A small percentage. I'm probably going to do maybe 5% of my total portfolio in one of my rollover IRAs. So take a look at it. You can also take a look at the other ones we talked about, like ICLN. And if you can't do the ETFs, of course, you can look at the individual stocks and research and kind of build your own mini ETF. If you haven't subscribed to the channel, please do click the bottom right-hand corner. There's also Patreon if you want to check that out. There's Facebook, which is free. You know, just I appreciate you guys. It's been a really cool journey over the last year and a half. I started this channel not really knowing where it was going to go, and it's been incredible. So I want to thank everybody that's watching this video, the people that are in Patreon and the people that aren't, but everybody's just been really great. We've got about 200 people in Patreon. It's been a lot of fun. We're starting to do t-shirts now and just kind of having fun and screwing around. So if you want to check it out, just Google Fired Up Wealth and Patreon. If you want a free group, you can join the Facebook group. Just go into Facebook and look for Fired Up Wealth. There's obviously Twitter. There's, you know, Teespring. There's a website. There's all kinds of stuff out there. But subscribe to the channel. There's more to come. I'm actually working on a video right now that's going to show you my entire $1 million plus portfolio, break down every single stock in there, every ETF in there, and it's going to be one that you're going to want to check out. So hope you have a great rest of your day. Appreciate your time and attention. Take care.